Some business news. And did you see this at 8:30 this morning? The February jobs report dropped. Wall Street reacting this morning, a bit disappointed. I mean, between the Iran war and the jobs report there, it appears there's plenty to worry about. Dow down some 700 points right now. Let's get to Mark Hamrick. Always appreciate his analysis. Senior economic analyst with Bankrate. Mark, good morning. Wow. Let's talk about that number this morning. What's your initial reaction?
We can't use four-letter words here, Dan, but one I would use that is legal is ugly. Everybody can breathe a sigh of relief now. It's ugly across the board, and this continues a pattern that we've seen since last summer, where we have 1 month of jobs creation and another month where we have contraction in payrolls. So the job market is essentially frozen now, and this data was collected around the 12th of February, so before the Iran war started. We have gasoline prices up 34 cents a gallon over the past week. So I've been reticent to use this word in the past because I don't think that it has been appropriate for the risk within a given situation. But we really are talking about stagflation here with respect to, averaging fewer than 10,000 jobs added a month over last year in the U.S. economy. And now there is sort of new piling on with this geopolitics task, gasoline prices, fuel prices of all kinds moving up. That inevitably has to filter on through the rest of the economy. And so just when people were hoping that they might get a reprieve from month over month and year over year inflation, we still have tariffs in the backdrop, and now we have this other tax, which is the geopolitics tax.
Yeah, I mean, plenty of economic headwinds when you lay it out like that. When you talk about stagflation, what would that mean for everyday Georgians who are watching this program right now?
I think they already experience, what this means in the sense of there has been, anecdotal evidence that the job market is unspectacular for a long time now. People have complained about long search times or, let's say, an unsuccessful job search process. And here we see, for example, labor force participation, the percentage of people working and looking for work, cratered, the lowest since December 2021. Part of that is the changes in immigration, but to be more straightforward about the impact, it means that it's more difficult for you to achieve your financial goals if it's going to cost more at the gasoline pump, if airline fares are going up, and that's even for the people who are, willing to fly or can afford to fly. Let's think about leisure activities. That's going to show up at the grocery store. What we don't know is how long this lasts, and we can hope and pray for all kinds of reasons that it is limited, not prolonged, and that the gasoline prices will go back down to something that's lower. But right now, no guarantee of that. And the job market weakness has been now persistent. I think that is the takeaway from the jobs report.
Well, it comes after a surprisingly high January, and I know you said it's just month by month dependent. I mean, what do you think March could be?
Well, we don't have any reasons to think that it should be better, but there might have been some one-time impacts that weighed on this February number, including, some impact from severe winter weather. We know that there was a medical workers strike that subtracted close to 40,000 jobs in the healthcare sector, but we had a decline here of 92,000 jobs, Dan. So even if you added 40,000 jobs back, that's still minus 50. And so, to me, it's quite stunning that with the revisions, we had downward revisions for the previous 2 months again as well. You look back at the past year and say, wow, we really didn't create many new jobs at all. And the 3 month average coming into and including February is much the same, with a single digit thousand number average. So, I mean, that's the situation. The unemployment rate, fortunately, is held relatively steady. It's up to 4.4% here. But that's the risk, particularly as we now have the impacts of this conflict that have to be dealt with within the economy. There are people questioning whether artificial intelligence is part of this. I think that's a minimal impact. We saw information workers decline by 10,000. And we don't have reason to argue at this point that the negative impacts of AI with respect to employment outweigh the potential positive impacts, where you have so much business capital expenditures going into that area of the economy, and that includes the data center build out as well. So I think it's worth watching, it's worth discussing, it's worth debating. I don't think it's worth a hot take.
Well, I do want to ask about that because I'm sure you saw the report out that went viral a week or two ago, maybe, about how AI is coming for blue collar jobs, or perhaps sooner than many of us expect. I mean, if you're saying it's a minimal impact right now, when do you foresee it being a noteworthy impact?
Well, first of all, it's a noteworthy impact from the overall impacts that it does have on the economy. The question is whether it is net destructive for the economy or the job market, and we just can't make that argument yet. For example, Challenger Gray and Christmas, which is a Chicago-based workplace consultancy, monitors job cut announcements. And they had several thousand jobs affected in a negative sense where AI is cited. There was a lot of attention in the last couple of weeks by the announcement from Jack Dorsey, one of the co-founders of Twitter, that the financial company Block was blaming AI or citing AI for cutting 40% of their workforce. And within 48 hours, former employees and other analysts came out and said, you know what, this is a new phenomenon. It's AI washing, where when in the past you used greenwashing or the environment as an excuse to cut jobs, or blaming environmental pursuits for a negative impact, we're blaming AI, where it's actually the business had mushroomed and had essentially not achieved its financial goals. And so, Dan, you're probably familiar with when retailers report their results. Very often they'll say, "Oh, well, that was a bad weather month," but Macy's has had bad weather months for decades now. So, I'd be watching it. I would be worried about the potential human impacts. I think those are all valid questions and concerns, but don't rush to judgment, because with every other wave of technology in the past, there has been essentially substitution of labor where, yes, you moved people around in the economy, but there wasn't a net loss of jobs. That's not to say there couldn't be tremendous disruption where people are pushed out of work sort of on an individual basis. But in the past, those people have found jobs elsewhere. Globalization's another story where, no, there wasn't a net beneficial impact in the United States where we lost manufacturing jobs. That's a different kind of consideration. So for the future, we need to be harnessing and anticipating the impacts of AI and robotics, because those waves are only going to grow.
Mark, I always appreciate your insights. Just one more minute here. Any insights you want to leave with folks as they sit around the kitchen table this weekend? They read about the jobs report. They're hearing about the war in Iran. They're filling up their gas tank, and it's more expensive than it has been in years. What do you want people to take away as they head into this weekend?
First of all, we'll get through this, as we have with so many challenges over the last 6 years. The pandemic-related downturn, inflation, war in Ukraine, and yes, so-called Liberation Day with the tariffs. In terms of what to do, be vigilant with your personal finances. This is a time to prioritize paying down debt, saving for emergencies and rainy days. A lot of people are getting federal income tax refunds this year that are higher than the past year, and some have lower tax bills. So don't splurge on that. I know the store selling widescreen TVs would love for you to go out and upgrade, but make your own judgment on that. But I have yet to meet anybody who's told me, you know what, I saved too much money in the recent past.
Good point. Mark Hamrick, Senior Economic Analyst with Bankrate. Always great having you on, sir. Thank you. Have a good weekend.
Thank you, Dan.